I keep hearing, Dubai has a massive oversupply. But is that really true, or are many people just getting carried away by headlines? Today, I'm going to show you exactly how many units are really coming onto the market and who is buying them. If you want to invest in Dubai or already have, you need to understand what's behind these numbers. Let's break it down clearly so that in the end you know whether you should actually be worried or whether others simply don't understand the dynamics of this market. Welcome, my name is Eugen Zimbelmann from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer and mortgage specialist. And now let's dive straight into the numbers. But before we look at each neighborhood and their current construction activity or discuss the impact of the Iran conflict, let's take a quick look at the past. Because understanding it is important. In 2024, there were 226,000 real estate transactions in Dubai, with a total value of 761 billion dirhams, around 200 billion US dollars. This volume increased by 36% compared to the previous year. Residential transactions rose by 39%. The price index went up by 18% and rents increased by 16%. This shows that demand on the buying side is, or perhaps we would say was, very much there. Because while overall demand is strong, at the same time a massive new supply is coming onto the market. But not everywhere. And this is the point that many completely overlook. If you hear today that there's an oversupply of real estate in Dubai, you immediately have to ask the follow-up question: where exactly? Let's take a look at the JVC district, one of many other areas of Dubai that brokers still call good locations. In 2026 alone, 14,480 new units will come onto the market there. And in 2027, another almost 13,000 units. That's over 27,000 units in just 2 years in a single district. This basically doubles the supply of properties in this area. And now ask yourself the next question. Who is going to take all these units and at what price? Or take JVT, a much smaller district right next to JVC. In 2026, over 5,000 units will be built there. And in 2027, nearly 4,800. That's almost 10,000 units in total. Again, supply has doubled. Now let's compare these established areas. In Creek Harbor, only 1,453 units are coming in 2026. In Marina, 3,492. That is completely different dynamic. And this is exactly where the market splits. A strong location is not defined by how much is being built, but by controlled growth in supply while demand remains stable. In weaker areas, the opposite happens. Supply hits the market faster than demand develops. And now it gets even more interesting. This topic doesn't just affect apartments, but also villas, the housing market in Dubai. In Damak Lagoons, 8,000 new units are being built. Emaar is bringing over 3,000 villas to the market in the Valley project. In Rukkan, more than 2,600 townhouses are coming in the lower price segment. In Damak Hills too, another 4,000 units are being added. Do you really think all of these units will be taken up at the same time without affecting prices and rents? Or isn't it much more likely that pressure will build exactly in these areas? Because the market doesn't operate on its own. When supply exceeds demand, balance of power shifts. And this is exactly what we are seeing right now. In many of these other areas, the tenant's position is becoming stronger. And what happens when rents fall? In the long term, property prices also drop. And now comes another point that hardly anyone talks about. Who actually bought these units? A large portion was bought by investors hoping to profit from the boom in recent years. The expectation was simple: price appreciation, quick resale and profit. But that no longer works. Today, it is much harder to resell an off-plan property That is a property still in the planning or construction phase, and I'm not even talking about selling it for profit. No. Today it is very difficult to sell an off-plan property even at the original purchase price, simply because the supply is so large. Brokers have no interest in marketing existing properties when they can focus on selling new property projects from developers instead. And developers don't care how prices move after the sale because they already made their money. And now there's an external factor adding to the risk: the conflict in the Middle East and the war in Iran. Many investors are currently observing rather than acting. And what happens when risk meets a rising supply? That's exactly when the first real shift in the market begins to appear. The key question is not whether Dubai has an oversupply, but where this oversupply is occurring and which properties are affected. And this is exactly the point that most people get completely wrong. They see headlines about record numbers. They see new property projects presented by developers at events highly staged than the Oscars. They hear something about a growing population and they automatically conclude that practically every property in Dubai must increase in value in the coming years. But no real estate market in the world works like that, not even Dubai. A property market is not a single block. It consists of micro markets, individual neighborhoods, individual buildings, specific property types, and ultimately very specific target groups. And that is why in the same city, one building can come under massive pressure while another remains stable or even sees increases in value and rental yield during the same period. So the question is never just whether Dubai is growing. The question is always where is the growth actually landing and which properties are really benefiting from it. Because population growth alone does not save a bad investment. This is a very important point. Of course, Dubai will continue to grow in the coming years, especially considering the doubts in Iran. Dubai will likely benefit in the long term from a leadership change and emerge stronger than many currently believe. Yes, the population will increase over time. And yes, capital will continue to flow into the city. But this growth does not automatically distribute equal across every neighborhood or project. And this is something many people take lightly. When thousands of new units hit the market in a single district, it doesn't just create new supply. It also creates new competition. Competition for buyers, competition for tenants, competition for attention. And if a property also has quality issues, a weak micro-location, unattractive layouts, a poor developer, construction faults, or simply too many comparable alternatives, then that property will be the first to come under pressure. And that's exactly why it's so dangerous when people only look at average values. The price index may rise, yet individual areas can already start to shift. Transaction numbers can be high and still certain buildings can barely be resold at reasonable price. The population can grow and yet rents in some other areas can fall. This does not conflict. This is normal market mechanism. And this is exactly the market mechanics you need to understand if you don't want to end up with a property that everyone told you was a top investment, while in reality you find barely any demand and can only sell it at a discount. Especially in areas like JVC, JVT, Ajan or Dubai Island, you need to look very closely. It's not enough to just say Dubai will keep growing. You have to examine in detail how many units will be handed over in the next coming years, which target groups actually want to live or buy there, the quality of existing stock, how much competition is growing within the same area, and whether the property is really in demand. Because one thing is clear. If tenants suddenly have the choice between 20 almost identical apartments, your unit does not automatically win. Usually, the cheaper, the better, or newer one wins. And that is exactly what creates price pressure. What many people don't realize is this: falling rents are much more dangerous for a market than most think, because lower rents change the calculations. When rental yields come under pressure, the fair purchase price also changes. If an investor can no longer earn the same rent from a property as originally expected, they are no longer willing to pay the same price. That's why the rental market and the purchase market are much more closely connected than many claim. And if short-term investors enter the market at the same time, hoping to sell quickly, it becomes even more problematic. These sellers aren't emotionally attached to the property. They just want out. And when many want out at the same time, that creates exactly the pressure we are now seeing step by step in weaker market areas. But that doesn't mean that all of Dubai is collapsing. And I want to make that very clear. Anyone who simply says that Dubai has a massive oversupply and that the whole market must collapse is making it too simple. This city is far too large, too dynamic and too diversified for that. On the other hand, anyone who acts as if there's no problem at all and every area will somehow be carried by growth is just as wrong. The truth is in looking at the differences. And this is also the difference between genuine market knowledge and simple sales talk. If you enjoy analyses like this and value content that doesn't just sugarcoat or create panic, then go ahead and subscribe to my channel Dubai Finance. This is exactly the kind of topics we examine here carefully and based on real data. And that's exactly why, for me, the most important message in this episode isn't sell now or don't sell. The key message is, first, understand what you actually own or what you want to buy. Because there are property owners who really need to think carefully, especially if they have invested in an area where massive new units will hit the market in the coming years. The quality is weak, the competition is increasing, and demand isn't keeping up. It becomes risky for those who currently still own off-plan properties. Here, action is urgently needed. Because in such cases, it can make perfectly sense to analyze closely whether to let go of a property before the pressure grows even more. But there are also owners in strong locations, in tighter submarkets, in solid buildings or with high quality properties for whom this kind of panic is completely misplaced. And this is where casual opinions part ways with professional analysis. At Dubai Finance, we don't just look at headlines or general price indices. We screen the market based on real transactions, compare purchase prices, examine the actual supply in each area, and inspect properties on site. A good deal is a property whose price, location, quality, tenant profile, and long-term potentially truly align. And you can only assess this if you go deeper than most market participants. That's why my advice is, don't make buying or selling decisions based on emotions, headlines, or hope. Make them based on structure, data, and real market knowledge. And if you want support with exactly that, if you want to know whether your property is in a risky market segment or whether you might be overlooking opportunities, then go now to www.dubai-finance.com and book a free initial consultation. Together, we will look at how the market really stands in your specific situation and what matters most right now. In the end, that's exactly the difference between investors who just react and those who make better decisions with clarity.